you've heard it a million times, right? Price action is king. It's supposed to be the holy grail of trading. But if that's true, why do so many traders who say they use it still end up blowing up their accounts? Well, today, we're going to pull back the curtain and dive into the 5 golden setups that really separate the pros from everyone else.
And this really is the million-dollar question, isn't it? The market is literally speaking to us all day long. It leaves clues in every single push, every pullback. The problem is, most people aren't fluent in the language. They chase big moves, get snagged by false breakouts, and then they just throw their hands up and blame bad luck. But here's the secret. It has nothing to do with luck. It's all about perception.
And this slide, this says it all. The amateur trader sees a huge green candle and their heart starts racing, that FOMO kicks in, and they jump in at the worst possible price. They chase. The pro sees that exact same candle, but they take a breath, they read the clues, they understand the story behind it, and they wait for their precise moment to strike. It's the difference between panic and precision.
So, here's our game plan for today. We're going to start with that price action paradox. Then we'll break down the 5 setups piece by piece. First the entry, then the framework for your stops and targets, and finally the really cool part, reading the market's narrative. By the end, you'll see how these all click together into one powerful system.
Okay, let's dive right in. The price action paradox. The reason pros win consistently isn't because they have some secret complex indicator or a crystal ball. It's actually much simpler. They've just accepted that the raw price action on the chart is the only truth that matters.
The best way to think about it is this. Price action is the market's heartbeat. It's the raw, unfiltered battle between buyers and sellers happening right now, in real time. Indicators? They're like reading yesterday's newspaper. They're telling you what already happened. They're lagging. When you learn to read the price as it's printing, you're on the front line, seeing things as they happen.
All right, let's get to our first golden setup. And trust me, this is a huge one. This single rule, if you can master it, will cure the most common and the most expensive mistake in all of trading: chasing a move after the train has already left the station.
So what is a trend pullback? It's literally just the market taking a little breather. After a big, strong move, the price pulls back for a moment. Now, amateurs see this and they panic. They think the trend is over. But the pros? They see this as a discount. They see it as the absolute best, lowest risk opportunity to get into a trade. Why? Well, it all comes down to risk versus reward.
And this right here shows you exactly why this is a game changer. When you chase a trade out of FOMO, your entry is way up high and your stop loss has to be miles away. You're literally risking $3 just to try and make 1. It's a losing proposition. But when you have the patience to wait for that pullback, your entry is surgical, your stop is nice and tight, and now you're risking just $1 to make 3, 4, maybe even 5 times that. It's a completely different ballgame.
Okay, you've nailed the entry. That's a great start. But a great entry without a solid plan is totally useless. That's where setups 2 and 3 come in. This is the architecture of a professional trade. We're talking about the 2 most important things: where to put your stop and where to take your profit.
Man, this quote just hits so hard, doesn't it? Come on, be honest. How many times has this happened to you? The market dips down, tags your stop loss to the exact penny, and then immediately rips in the direction you wanted it to go. It feels personal, right? Well, it's not. It happens because you and thousands of other traders put your stop in the most obvious textbook spot on the chart.
So the professional approach is totally different. Step 1, you actually identify that obvious level where all the amateurs are going to put their stops. Step 2, you use a tool like the average true range, the ATR, to measure the market's recent noise level. And then, step 3, you place your stop beyond that noise. You give it just a little extra breathing room. This simple trick helps you avoid all those stop hunts and shakeouts that take everybody else out.
Now, let's talk about the third setup, your profit target. This is another classic mistake. Amateur traders learn about risk to reward and they think, okay, I want a 1 to 3 trade. So they just measure it out and plop a target on the chart. But guess what? The market has absolutely no idea you exist, and it certainly doesn't care about your math. The professional way is to let the market itself tell you where the target is. You just look left on your chart. Where is the next major wall of resistance? Where is the next obvious floor of support? That's where the opposing team is waiting. So you anchor your target just before that level. And here's the key part. It's only after you've identified that logical target that you calculate your risk to reward to see if the trade is even worth it.
Okay, so we've built the framework for a solid trade. A great entry, a smart stop, and a logical target. Now we get to the really fun part. This is the art form. This is about reading the story that the market is telling you in real time. Setups 4 and 5 are all about spotting when a strong trend is starting to run out of gas.
You know, every trend tells a story, and the first chapter is always about momentum. You know what this looks like. Big, healthy, expanding candles, just confidently pushing in one direction. Conviction is high, and the path of least resistance is obvious. This is what strength looks like.
But then, the plot twist arrives. As the price moves higher, you start to notice the candles are getting smaller. The pushes are getting weaker. The engine is starting to sputter. Now, this is the market whispering to you that momentum is fading. Amateurs see this and think, ooh, a chance to buy a little dip. Professionals see it for what it is, a massive warning sign.
And that leads to the climax of the story. The slowdown was your first clue, and now the move is just clearly exhausted. The trend is struggling to make new highs, and the risk of a sharp, sudden reversal is incredibly high. While amateurs are still trying to jump on board, the pro is already taking profits or planning for the trend to flip.
And this brings us perfectly to our fifth and final golden setup, triple touch exhaustion. This is such a specific and powerful reversal pattern. The boxer analogy is perfect. Imagine a fighter in the 11th round. He throws a strong punch, then a second, weaker one. By the third, he's just swinging his arms, there's no power left. That is exactly what this pattern shows you on the chart.
Here's how you spot it, step by step. First, you see a strong initial high. Then, you see a second push that's noticeably weaker. It barely gets past the first one. Then comes a third, pathetic little push that shows the buyers are completely out of gas. And the final nail in the coffin, the price rolls over and prints a lower high. That's your confirmation. The uptrend is over.
All right, let's bring this all home now. It is so important to understand that these 5 setups aren't just a random collection of tips. They're not a checklist. They are a single, cohesive system for reading how the market actually flows from strength to weakness and back again.
So let's just recap the whole system real quick. You wait for the clean pullback for your entry, you place your stop just beyond all that obvious noise, you anchor your target to real, historical market structure, you read slowing momentum as a warning sign, and you spot an exhaustion pattern right before the big reversal. That's the whole shebang.
And this is the real takeaway. When you combine these 5 ideas, you stop trading based on abstract theories from a book, and you start trading the actual reality that's unfolding on your screen. You're reading the structure, you're reading the momentum, and you're reading the psychology of all the traders behind every single candle.
So, I'll just leave you with this one question to think about. After everything we've talked about today, ask yourself, are you reacting to your own fear and greed, or are you actually listening to the story the market is telling you? Because the moment you can honestly answer that question, everything will change.